little bit about debt investments. Pranav, there are two options. There's the NRI deposit and the NRO deposit. Could you tell us what the difference is between the two?
Yeah, so typically an NRO deposit would be funds which are non-repatriable, which a non-resident Indian might have had held in India even prior to leaving India, for example, his savings when he was here. And those are held as part of his non-resident ordinary account, for example, so the NRO account. NRE deposits are really funds which, having earned incomes or wealth abroad, he remits into India in convertible foreign exchange for making investments into India. That really is part of his NRE deposits of funds, as we say. That's conceptually from an exchange control and legal perspective. From a tax standpoint, any NRE deposit, typically, the interest thereon would be completely exempt under the Indian Income Tax Act. So it's completely tax-free. And NRO interest, unlike NRE interest, NRO interest would be taxable in the hands of the non-resident. It's income which has accrued, arisen in India and is received in India. Right now, the NRE deposits fetch extremely good interest rates thanks to the latest deregulation by the RBI. So really very good interest rates, upward of 9% that banks have been offering, completely tax-free. Of course, if there's any further depreciation in the rupee, that's the risk that the investor is taking.
Right, so 9% tax-free sounds like a really good deal. Virendra, would you recommend an NRI investor replace their debt allocation with this NRE investment?
I think, Indian fixed income or Indian fixed deposit from Indian banks actually present a very compelling case for them. And even if they are, investing in their domestic market, their domicile, even in equities, I would say that their fixed income allocation can well be substituted by Indian deposits.
Prakash, does that give us an opportunity then for some sort of arbitration? Can an NRI borrow from the country that he's living in right now and invest that money in India? Because 9 or 10% tax-free, it sounds like a really good deal.
Absolutely. I mean, there is a great arbitrage opportunity, and that's exactly why you have a lot of even foreign institutional investors doing it. But from an NRI's perspective, I would recommend leveraging, borrowing locally and investing. But what you could possibly do is don't spend from your savings. You would probably borrow for those particular expenditures like a mortgage, car loans and stuff like that, because those would be available at much lower rates, and invest their savings into Indian fixed income. So that's how you could take advantage of the arbitrage, but not straight away borrowing and investing out there.
All right. But we have a quick question from Deepak Agarwal, who's written in from Dubai. He's an NRI. He tells us he bought a home in India in 2009. He cost him about 25 lakh rupees from his NRO account. He sold the flat for 28 lakh rupees and made a profit of 1.84 lakh rupees on the sale. Will he need to pay capital gains tax?
Yes, he is subject to Indian taxation on the capital gain, much like an Indian resident would be. So in that sense, there is no difference, because even for a non-resident, if income accrues, arises or is received in India, it is taxable. And this is a capital gain which would be taxable in his hands.
And anything he can do then to avoid paying that tax? Can he reinvest the money?
Not really. For that, it has to be a long-term capital gain. So even a non-resident Indian is entitled to reinvest the capital gain on sale of one house into another house within a certain period of time. So if he purchases a house within 2 years or constructs one within 3 years and so on. But for that exemption to be available, the capital gain ought to arise from sale of a long-term capital asset, which means he ought to have held the house for more than 3 years before he sells it.
All right. So right now, unfortunately, Deepak, you're going to have to pay tax on that, on the sale of that house. And Virendra, we have a question from Dr. Prasad, who writes in saying he's an NRI. He plans to return to India soon. He wishes to continue working in India, so he estimates his income will possibly be in the 30% tax bracket. Now, he tells us he has 5 lakh rupees in his NRE account right now. He wants to know which tax saving schemes he can put his money into.
I think he has to start worrying about the tax saving investment once he has, those tax saving. He has those earnings in India. Then only he can take that ATC break. If his earnings are abroad, then today it doesn't have to worry. If it's happening, if he will have earnings to where he needs a tax shelter, and it is happening in the next 3 months, then our usual tax picks, tax saving fund picks, which is HDFC tax saver or Fidelity tax saving fund, or a relatively new Relegate tax saving fund and Taurus tax saving fund.
So a couple of tax saver funds that you can consider, Pranav?
Previous point, I don't know, maybe the investor wants to consider, I forget the name that you mentioned, that if he has deposits in an NRE account, even after he comes back to India, under the Foreign Exchange Management Act, although he might be an Indian resident for the next financial year beginning April 2012, he might be a resident in India for tax purposes. From a FEMA standpoint, he might still remain a non-resident for that year, April 2012 to March 2013. And if that is the case, probably the NRE interest might still qualify for an exemption for some more time. And given the kind of NRE interest rates that we have, I wonder whether the investor wants to consider leaving it for some time in NRE deposits probably and get the tax-free advantage that I think Virendra was talking about.
All right, Dr. Prasad, that's very interesting advice. You might actually consider just continuing to use your NRE account. All you have to do is speak to a tax consultant and find out if you can also be a non-resident from a tax point of view for one more financial year. That would be the best tax-saving investment for you. I want to bring you in very quickly. If you could tell us, for an NRI who's watching right now, given where you see the market is, are there any stock recommendations that you can give them, considering they're a 5-year or a 6-year or maybe even a 10-year investor?
You know, some of the great PSU stocks that we have, look at Coal India, you'll probably look at ONGC, you know, companies in the energy sector very clearly visible for the future. You'll probably look at some of the auto companies, Tata Motors, global player, domestic strength. So, you know, I mean, there's so many of them, but stick to the blue chips, stick to the ones which have very good corporate governance, so you don't have doubts, you don't have to keep on looking over your shoulder for something going wrong. And some of these PSU stocks do offer tremendous amount of value.
Now, we're going to have to slip into another break, but before we go, I want to leave you with a list of the funds that Dhirendra Kumar has recommended for us. Now, these are 5 different portfolios designed for different age groups. They're going to pop up on your screen, and they list out the portfolios that Dhirendra has designed for this show. Remember, he said it shouldn't matter whether you're an NRI or you're a resident Indian. This portfolio should apply to both of you, so you can jot down those funds. We're going to leave you with that at the end of this segment. Come back, we'll talk about your insurance investment. I want to talk a little bit about insurance policies as well. We have a question from Madhusudan Lakshman, who's written in saying he's a 38-year-old NRI with 4 insurance policies with a total value of 8 lakh rupees. He's also invested in HDFC's Children's Gift Fund for 1 lakh. He wants to know if he's on the right path to invest for his future. Dhirendra, 8 lakh rupees going into 4 different insurance policies, would you say that's a very wise decision at this point?
Not at all. You know, we have strongly advocated all these years that don't mix your insurance and investment. You get worse of both. Square it up. And approach is, you know, get adequate insurance coverage. About this fund, this is a very interesting fund, you know, HDFC Children's Gift Fund, the investment plan. This is a fund which can be up to 75% into equity. It has done exceedingly well. It has given with a relatively, you know, without being an all-equity fund, it has given nearly 16-17% annualized return since its launch, and it's a very old fund.
Madhusudan, the HDFC Children's Gift Fund is a good idea. Now, as far as term insurance policies are concerned, unfortunately, a lot of Indian insurance companies don't offer term policies to NRIs. In fact, we got in touch with Anil Sehgal of iSave. He's an insurance analyst, and we asked him if there are any insurers at all who offer term policies to NRIs, and this is what he had to say. Anil.
There are a few companies that have given us indications that they will make the product available to NRIs, subject to the NRI being resident in India or visiting India at the time of application, and subject to the fact that they have income in India. These companies could include, for example, Kotak Life Insurance, but not their online plan, only their offline plan. India Life also says that they cover non-resident Indians, as does Bajaj Allianz.
We have a quick question that's come in from Sirajuddin, who writes in from Muscat. He invested 27 lakh rupees in the Sundaram Select Debt Ultra Short-Term Fund, and he tells us he picked the dividend option. Now, if he had invested the same amount in the growth option, he says he would have earned about 7,000 rupees more in return. He wants to know what is the reason behind that discrepancy, and should he now switch to that growth option?
Absolutely. That is a thumb rule for all NRIs, because they can invest in all mutual fund on a repatriable basis. But the withholding tax, the tax TDS on dividend paid, that can be overcome by investing in the growth plan, because all the, that is a law which applies, that dividend payment from mutual fund, there will be a TDS, and the growth plan where you are basically redeeming your investment and it goes back in the form of a capital gain. There is no deduction on that.
A lot of NRIs send or wire the money back to their parents who live in India, who then make investments on their behalf. Now, from a taxation point of view, what would be the best way to do that? Should the parent then invest in their own name because they're senior citizens and they possibly have a higher tax slab, or should they be investing in the name of the NRI? From a tax point of view, what would be a better advice?
Right. If the investment has to remain that of the investor, meaning the NRI, then certainly it's better that the investment remains in his name. It remains fully repatriable. It enjoys all the benefits that NRI taxation enjoys. Plus, the parents could probably do that as power of attorney holders and so on. And therefore, for all practical purposes, I think while it would depend on the facts of a particular given case, I would feel it must be looked at from the NRI standpoint.
So if you're an NRI, it makes most sense for you to make that investment in your own name for the tax benefit, even if your parents are doing it for you as power of attorney. That's a wrap on this episode of Investors Guide. Thanks for watching. Gentlemen, thank you so much for joining us on the show and answering our questions. Dhirendra, we look forward to sitting down with you again next week and going back to our regular format of answering questions on mutual funds. Remember, there's an email ID at the bottom of your screen where you can write to us, and this show will also be available on our Facebook page, facebook.com/investorsguide. You can send those videos to your family members overseas as well. Tune in next week to catch Investors Guide. Thanks for watching.